Sorry about that. So these are the entries that you would make at the end of the period to adjust the balances to correct their balances. Now, I know a lot of you were nervous because you didn't know which one was accrued or deferred. Don't be too hung up on that stuff. Just you want to understand a deferral moves an expense to the future, an accrual brings it back into the current period. So it's simple. There's not going to be 100 questions on your test asking you to identify deferrals and accruals. Okay, so don't panic after last class. Today we're just going to walk through some big examples. All right, so account description here, it says it rents office space from John Q. landlord for 2 years, starting immediately at a rate of $100 per month or $2,400 in total. The full $2,400 was paid on this date. Record the original transaction and the appropriate adjusting entries from the point of view of the tenant and the landlord. So we're going to start with the tenant. And so the tenant paid out cash to get prepaid rent, right? So your first entry would be prepaid rent, and that would be $2,400. You gave up cash, so that's going to be your credit of $2,400. We're on page 4. It looks like this if you have your handout, in case you're confused, in case you need that. Everybody got this page? Good, good. Awesome. Okay. Yeah, that's good. Right. So now we have to get to our adjusting entries, and we're doing our adjusting entries, in this case, at the end of the year. So in that first one, 12/31/2022, how many months of expense do we have? What's that? Well, so July 1, right? So I think you're close. I think it's 6. So starting immediately. So it'd be July, including July. So that'd be 6 months. So what we have to do is now record rent expense because we've used up that rent. You don't have to write the 6 months part unless you want to. So for your notes, you see where it's coming from. And then we're not giving up cash at this point. We're just correcting our prepaid account. So we're going to reduce our prepaid account. $600. So now remember the T account. I'm not going to do this for every one, but is an asset. So we know a debit increases it and a credit decreases it, right? So what we did initially was we put $2,400 into this prepaid account on 7/1. And then what we did at 12/31 was we took $600 out. So this is our rent expense. And then remember, this would be our ending balance of prepaid rent. And when we look at this, you know, your assets equal your liabilities plus your equity, which remember, paid in capital, retained earnings, revenue minus expense. Then the initial thing you did was you subtracted out cash of $2,400, and you added a prepaid rent for 2,400. So that was my first transaction. Keep in mind, this nets out to zero, right? So we don't have to balance it on the other side. Now what happens here is the next one at 12/31, we subtract 600 from prepaid rent. And we have a $600 expense. And so that balance is there, and that's when we report the expense. But initially, all we did was give up some assets to get an asset back. And then 12/31/2023, we would have to record the next year's rent expense. And this would be 12 months at 100. And so 1,200. And we're going to reduce our prepaid rent by 1,200. And then we don't have 12/31 here, so you can just kind of cross off that one. It should be 6/30/2024. And this would be rent expense. 600. And then prepaid rent for 600. Okay, any questions? Okay, now we're looking at the transaction from the tenant. So first, we were the company that was renting the building from the landlord. Now we are the landlord renting it out. So we got cash of $2,400. But we have not earned it yet. So it goes in as unearned rent revenue. And for the full amount, 2,400. Now, at the end of this year, we're able to claim 6 months of rent. So we can go ahead and say rent revenue. And this would be 6 months times 100 because we delivered on that, so 600. Sorry, don't write that one in yet. This is unearned rent revenue. And then we're going to go ahead and report rent revenue for 600. Sorry about that. Okay, now on 12/31 the next year, we're going to have unearned rent revenue, 12 months at 100. So 1,200 and rent revenue or 1,200. And then the last 6 months of it would be unearned rent revenue, 600, and rent revenue of 600. Any questions there? I'll give you guys a minute to finish writing. Don't worry. I'm not going to rush on to the next part. So you can substitute rent here for prepaid insurance or prepaid advertising and do this exactly the same way. Okay, you just change the account names. Any type of prepaid can be done exactly like this. Again, on the other side, you wouldn't be a landlord, you'd be whatever insurance company or advertising company. So I know you probably all heard this before, but you may or may not remember, and it's how do we accrue interest? And so you have to think about principal times rate times time. So the principal is the amount of the borrowing. Rate is the annual rate of interest. So sometimes they'll tell you there's a monthly interest rate, but generally speaking, when they say I'm going to pay something like 10% interest, it's interest for the year. So just be careful when you read the question. You know, something like 20% per month would probably key you as that's kind of a mistake or an issue, whereas 2% per month would probably seem high but reasonable. And then time is expressed in years in a year or months, but use 12 over 12 months. So if a company borrows $5,000 at 8% interest for 9 months, the formula to calculate interest would be equal to 5,000 times 0.08. 0.08, remember, is how percentages are expressed, right? So 100% equals 1, 50% equals 0.5, 8% would be equal to 0.08. Okay, just a reminder. And now for your time, we're multiplying it, and in this case, they've given us in months, but we have to divide by 12 because its interest is given to us in a full year. Make some quick calculations. 5,000 times 0.08. If you're using a simple calculator, just multiply by 9 and then divide by 12. So the interest due in 9 months would be $300. And you say, well, why does this matter? Well, when we're doing accruals at the year end, we have kind of a timeline for the year, and we want to make sure all of our expenses are reported properly. So if that 9 months started on July 1, we'd have 6 months in year 1, and then we'd have 3 months in year 2. So we would have to record the expense and accrue it as $200 here and $100 here. So we would have to make this entry at year end for the $200. Okay, so it's important to keep your expenses in the proper year that they were incurred. Now let's jump into an example. Okay, so again, principal times rate times time. And so we have 10,000 principal times 0.09, and time says 3 months. So we take 3 divided by 12. So 10,000, not 100, times 0.09 times 3 equals, and then divide by 12, and we get 225 interest. Okay, Magic Ink collected 24,000 in October, 20x1 from its customers in exchange for 12-month subscriptions to its magazine, Magic Times. Gotta be out of Colorado, right? Magic Times. Okay. We can't do that down here. The October issue was the first of the subscription. Which statement is true regarding the effects of collecting the cash from customers in October? So let's just think about the entry, right? What did we get? We got cash of 24,000. And we have a liability, which would be unearned subscription revenue for 24,000. So we increased our assets and we increased our liabilities. And so this first one matches. So that's good. No, that's the answer. Assets will increase and shareholders' equity would decrease. That's not correct. Liabilities and shareholders' equity will increase. It's not correct. And assets and shareholders' equity will increase by 2,000. That's not correct. Okay, we've got depreciation. Depreciation is the reporting of expense for long-term or non-current assets in the period incurred. And so if we buy a building, we're not going to use that building up all in 1 year. We assume a building's gonna last somewhere between 20 and 50 years, depending on the type of building. And so we've got to expense it a little bit each year based on the type of formulas. Now, we're not gonna get too much into all the formulas. Most of the stuff for depreciation is going to use straight line. And so the formula for straight line is the historical cost minus the salvage value, or whatever you can get with it on return. Sometimes if it's a building, it would be what could I sell it for at the end. And that gets divided by the years of service. There are other methods of depreciation. If we come into them, then I will talk to you about them. But most of the time in the early chapters, we're just using simple straight line depreciation. Accumulated depreciation is the accumulation of depreciation for a specific asset or asset class. Remember, this is a contra asset account. Just letting everybody catch up. I see a few people still writing, so give it another 20 seconds and then we'll go. Book value for non-current assets equals the historical cost less accumulated depreciation. So for example, Company Z buys a $50,000 truck in 2024 and expects it to last 5 years, at which time he'll be able to sell it for scrap of $2,000. What is the annual depreciation? So, using straight line. And so we would take the historical cost, 50,000, minus the salvage value of 2,000. And we're going to divide that by the number of years, 5 years. So this is 48,000 divided by 5. And so that would be 9,600 per year. So to record the depreciation, I'm hoping you can still stay on that same page. I'm using a lot of space, I apologize, but you can still come back to it. You would record depreciation expense, and that's the debit. And that would be 9,600. And then you would have a credit to accumulated depreciation for your truck of 9,600. Now my book value at the end of year 1 would equal 50,000 minus the 9,600, which I think is going to be 40,400. Any questions there? Okay, so company pays 205,000 cash for factory equipment that has a useful life of 10 years and an expected residual value of 5,000. Expected residual value is also salvage value, whatever's at the end. So we're going to go ahead and use our formula. Historical cost minus the salvage value, or residual value in this case. Divided by the number of years, 10. So we have 205,000 minus the 5,000 divided by 10. So that equals 200,000 divided by 10, which is 20,000. And so the answer is letter B. Good. Any questions? Okay. So next we're jumping into example 5. And what we have to do is we have to prepare the adjusting entries. Now I'm hoping that you guys can open this up and see both parts here so that you can write and actually still see it. And so we're going to be writing on page 7. Page 6 is where I'm getting this information from. So expired insurance 400. So we look and we see that we have on our unadjusted trial balance, we have prepaid insurance of 1,200. So 400 of that expired. So we're going to report insurance expense of 400. And we're going to reduce our prepaid insurance by 400. Hello? I'm sleeping in accounting class. Remember, you can laugh at me or with me. I don't know the difference. Okay. Here we have unused supplies for the inventory of 800. So we have to go back and say, okay, what did we have in supplies? 2,100, right? So we had 2,100, but only have 800 left. 2,100 minus 800 means we used 1,300. So our second entry would be supplies expense. And we're reducing supplies here by 1,300. Estimated depreciation. Doesn't say on what, but we only have one class of long-term assets, and that's equipment. So we would report depreciation expense, equipment for 1,000, and accumulated depreciation for equipment is 1,000. Number 4, earned but unpaid salaries. So this means that you have employees that work for the company and they didn't get paid yet. So it falls, the end of year period falls between pay periods. So we have to make the entry wages expense and wages payable for 700. And then the last one says services were completed from a client, but the client has not been billed yet. So we should have billed them, but we didn't, but we need to record the revenue. So in this case, it just says services. So I'm going to call it service revenue for 500. And then it would be accounts receivable for 500. Any questions on the adjusting entries? Okay. So now we just want to post these entries, and the way that I did this is so you can just kind of carry them down, but unfortunately it's going to be hard for me to show both of these. So what you want to do is find them on here And so we don't have insurance expense. So we're gonna have to go ahead and put insurance expense in here. And we reported 400. And part of that entry was also reducing our prepaid insurance by 400. Now I'm going to do the entries first before I start sliding up and coming up with balances here to show you what I want you to do for this last little part here. Okay. Number 2 says supplies expense and supplies. So we have to add supplies expense. And that was 1,300. And we're going to reduce our supplies by 1,300. Number 3 says depreciation. So we're going to have to add depreciation expense here. And that was 1,000. And we're going to have to add 1,000 to accumulated depreciation. Number 4, earn but unpaid salaries. So we do have a salaries expense here. So we're going to just put the 700 there. We don't have a liability, but we created one. So wages payable is our liability, and that's 700. And then the last one, services completed by client. So that's going to be revenue of 500 and accounts receivable of 500. Excuse me, I made another mistake here. This has to be switched. Accounts receivable and service revenue. My apologies. Okay, so now what you need to do is you kind of need to bounce back and forth here and say, okay, my cash balance is 4,000. So I didn't have any entries for it. So my balance is going to be 4,000. Now we're going back to accounts receivable. It has a $400 balance, but we added $500 to it. So it's going to be 900 for the balance. Bounce back up to supplies, or no, I'm sorry, prepaid insurance was 1,200. And so that was a debit balance. We have a credit balance here, so we're going to have to reduce it by 400. And so we end up with 800. Supplies, 2,100 minus the 1,300 is 800. Equipment had a balance of 20,000. We did not make any entries on equipment, so that remains a debit balance of 20,000. Accumulated depreciation had 2,000 in it already. We added another 1,000, so this would be 3,000. And so just a little side note here, between these, book value of equipment equals the 20,000 minus the 3,000, so it equals 17,000. Now, does that mean that that's what the equipment is worth on the market? Not necessarily. Keep in mind, book value is the accounting value. Your fair value, you may be able to sell that equipment for more or less on the market, but we're not concerned about that. We're concerned about reporting the activities of the business. Okay. Go back up. Now we're at common stock. And so common stock had a balance of 19,000, and we didn't make any entries there, so that's 19,000. Retained earnings was 0. So we come down, and at least initially here, our retained earnings is also going to be 0. Dividends was 2,000. So that's going to have a balance of 2,000. Revenue 33,000. So now we had 33,000 plus 500, so 33,500. Salaries expense was 18,300. We're adding the 700 to it. And so that's going to be 19,000. Rent expense, 6,000. We didn't make any changes there, so that's just going to be 6,000. And then we have no other accounts, so we just have to go back down and make sure the ones that we put in are properly carried across. So wages payable, so it's credit balance, so it's going to be 700 credit. And then we have 400, 1,300, and 1,000. Okay, and what I want you to do now is total all of the columns. Oh, wrong side, right? Good catch. So this is always why I do this, right? Because I made a little mistake. I carried these over into the credit column. I meant to carry them over to the debit. So 400, 1,300, and 1,000. And so these all balance out. So you should get 3,900 and 56,200. So always go back and check and make sure you did this properly. And the way that you do that is you total them up. And if you made a mistake, it shows. All right. Okay, and then all you would do is carry these balances down here into this final one. I don't know if it's going to copy properly, but bless you. I'm just straightening out some of these so that it looks good. Bless you. Little Taylor. We'll remember you, Taylor. I think that's all of it there. So your finished one should look something like that. And that's on the last page, page 8. Okay, I'm gonna pass you out the in-class group work for next class. One for each of you there. One and one. One for you. And one. Grab one and pass the rest down. Oops, sorry. Any questions from today's notes? Sorry about that. So I'd like you, while you're here now, to look this group problem classwork over carefully. If you have any questions, you can ask me. So I am going to give you guys half an hour-ish next class to do it. I'm going to give you guys 10 minutes now, and then we'll get out of here at 10:30 just to kind of start and talk about it. And then at 10:30, I'll let you go, and then we'll finish it probably in a little less than a half an hour in the next class, and then we'll start chapter 4 notes. All right, so take 10 minutes now, just go through it. If you're going to be working with somebody, it's okay to do. Talk to them. Figure out your plan of going about it. I encourage you to work together. Yes? I just haven't graded them yet. You guys are too quick for me. I have a few people that are uploading it online, so it has the due date. Yeah, no. You guys handed it to me. The reason I'm passing this out now is so if you are going to miss class and you are not going to be here, or your partner on it that's working on it is not going to be here to turn it in with your name on it next class, then you should upload it onto the website. It is out there under group work, or it will be, so you can load it. And by the way, if you hand me something, I usually will take a couple days to grade it, so it will show up as missing until I enter it in. All right? Please don't be afraid of each other. Try to work together. Try to develop a few relationships. If you're online, thank you for watching. If you have any questions, we're working on the group project and we'll be picking it up on Tuesday's class. Have a great weekend.